Good evening. Nifty gained 0.77% this week, but the headline hides two more useful stories. Leadership rotated sharply, and India's new closing auction changed both expiry settlement and zero-DTE option decay. Monday began with relief. Brent crude fell about 5% after the United States paused new strikes on Iran, and hopes rose for a Strait of Hormuz arrangement. For oil-importing India, that eased immediate inflation and cost pressure. 44 of 50 Nifty stocks advanced. But the 1.6% headline gain overstated the continuous move. Ordinary trading finished almost where it began. The closing auction session then established an official close about 201 points higher. Breadth showed genuine strength, while the auction explained the unusually high closing print. Tuesday reversed the path. On Nifty expiry, the continuous market lost roughly 240 points from the open and 35 stocks declined. The auction then lifted settlement by about 152 points, reducing the official loss to 0.64%. It changed settlement. It did not erase the weak session. Wednesday was about policy. The Reserve Bank held the repo rate at 5.25%, retained a neutral stance, and kept its 6.7% growth forecast. Nifty finished almost flat. Autos, metals, and realty rose, while private banks fell. The response was selective, not a broad re-rating of rate-sensitive sectors. Thursday looked calm at index level, but only 15 Nifty stocks advanced. Reliance, SBI, and public sector banks cushioned weakness elsewhere. Domestic institutions bought about 4,014 crore rupees in the cash market, while foreign flows were nearly flat. SENSEX expiry again exposed the new structure. Its auction added about 172 points, nearly 46% of the official daily gain. Nifty's adjustment was only about 8 points. 1 week cannot establish an upward auction bias, but it does show why the continuous session and auction-derived settlement must be analyzed separately. Friday completed the rotation. Nifty fell 0.27%, even though every Nifty IT stock rose and autos gained 1.84%. Private banks fell just over 1%, with ICICI Bank down 2.5%. SBI and Hindalco could not fully offset that drag. Earnings were strong but not uniformly rewarded. SBI reported 10% profit growth, nearly 15% growth in net interest income, and improving bad loan ratios. Hindalco reported 32% revenue growth and 75% profit growth. Airtel delivered higher revenue and mobile revenue per user. Trent grew revenue, operating profit and earnings, yet its shares fell sharply on Friday. Results matter, but expectations, valuation, and profit quality determine the market response. For the week, the broader Nifty 500 rose 1.07% and small caps gained 2.73%. Public sector banks led with 5%, followed by metals, autos, and technology. Private banks and realty declined. This was selective repair with rotating leadership, not a uniform risk-on rally. The most important structural change appeared in zero-DTE options. On SENSEX expiry, the rolling at the money straddle opened near 498 points, rose 18% in 15 minutes, peaked 41% above its opening premium, and remained 32% higher at 1 p.m., despite having less time remaining. A simplified implied volatility estimate more than doubled by 1 p.m. The preceding pre-auction expiry behaved very differently. Premium declined normally, even though its morning index range was wider. The evidence is consistent with uncertainty about auction-derived settlement increasing implied volatility enough to more than offset theta decay. Once settlement appeared, extrinsic value collapsed within minutes. This is a two-expiry finding, not yet a permanent rule. From a technical analysis point of view, Nifty remains above its short and medium-term daily averages. Daily stochastic is high but cooling, while 2-day and weekly momentum remain constructive. The first reference area is roughly 24,425 to 24,475. Longer-term measures cluster overhead between 24,750 and 24,875. Holding the first area would preserve the repair. Sustained acceptance above the second would strengthen it. These are observation zones, not trade instructions. Next week, Titan receives its first market response after releasing results on Friday evening. NIFTY expires Tuesday. India and the United States release July inflation data on Wednesday, followed by SENSEX expiry and United States producer inflation on Thursday. Fresh option positioning must be calculated for each expiry. Last week's map is not a forecast. Oil remains the fastest macro override. Strait of Hormuz talks continue, but conflict and shipping risks remain unresolved. Friday's weak United States employment report supported equities by reducing expectations of an immediate rate increase, but also raised a growth concern. Inflation will help determine which interpretation dominates. The week's lesson is simple. The index was resilient, but strength was selective, and the closing auction changed the meaning of settlement and expiry day decay. Next week, watch whether private banks and broader participation join the repair, or whether oil, inflation, and overhead resistance interrupt it. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security.